So thanks everyone for joining in. This is, I think, our sixth webinar in the series focusing on digital lending and what is happening in the ecosystem. And we have a very, very esteemed set of panel members here today. Really glad to have all of you here. So we have Eklavya Pandit, who looks after partner integrations. He's the head of partner integrations for Arthmate. We have Raman Agrawal, who heads strategy and finance for Finsall. And then we have Tushar Panhale, who is the head of payments for Kissht and Ring. And then we have Rajat Deshpande, who is the co-founder and CEO of FinBox. We have Samir Gupta, who's from our very own Cashfree Payments. He's the director of product management. And I am Aditi Oleman. I head new initiatives for Cashfree. Thanks, all of you for joining in. I'm really looking forward to a very interesting conversation. While the topic itself talks specifically about collections, but I think we will go a little bit broader and talk about what is happening in the lending ecosystem. We have players who are NBFCs, and then we have embedded finance providers, and then we have, of course, us as the payment provider. So I'm really looking forward to an engaging discussion and conversation. I'll also request folks who have joined in, if you have questions, you can keep posting them in the Q&A section on chat. And as we go, we'll try to take questions during the conversation rather than towards the end. Great. So I'll get started with Eklavya. Eklavya, Arthmate is, basically working in the embedded finance as a service space, right? It's building blocks for NBFCs and banks, right, to be able to provide more efficient lending, right? So how big a role does efficiency and efficacy play in a digital lending ecosystem, starting from, verification, verifying your borrower, to disbursing, to repayment, and so on and so forth, right? So just wanted to understand how, efficacy works, and what role does Arthmate play in bringing in that efficiency and efficacy to the ecosystem?
So yeah, thanks, Aditi. Hi, everyone. So as you rightly said, I think digital lending is all about accelerated turnaround time, increased operational efficiencies, and a top-notch user experience. And now with the fintechs adopting end-to-end digital journeys from onboarding to repayments and to collections as well. So I believe, in my point of view, there are 5 major challenges which we face at Arthmate a lot, and we are working on multiple technological advancements to basically effectuate all these challenges. So if I'll start with the first one, basically is the credit risk assessment, which is the major task for us, just because with the emergence of a lot of fintechs, LSPs, the accessibility of credit to the masses has become very easy. And now dealing with these customers which have limited credit history, it presents quite a challenge for us to underwriting these thin files. So I think at Arthmate, we are trying to incorporate multiple scorecards based on alternate data, and we are using multiple data science models to underwriting these customers, those who don't have any kind of bureau data available from different bureau cards altogether. Second, if I'll talk about, will be on the fraud detection part. So we being an NBFC, most of our loans are sourced by the DSAs or the LSPs, which are majorly working in the digital market altogether. So doing or identifying the customer's identity, whether it is genuine or not, it becomes quite a challenge for us, because right now, most of the players are doing a faceless KYC kind of a thing. And basically handling this challenge in Arthmate, we have tried to come up with a KYC engine where we are using multiple technologies like computer vision, OCR check, selfie check, name check, PAN match, CKYC, and multiple other tools as well to basically establish the identity of the customer. On the second part, I think what we basically face challenges on is the validating the documents which we are getting to underwrite a particular loan. So there is an optimization that is required, just because if we ask for more documents, there will be a lot of drop off in the journey. So that's why we have to keep the documents to a minimum. And the documents which we are getting, are they authentic? So for that as well, we are using certain part of OCR and computer vision to figure out that these documents are correct or not. We have third-party agencies as well, which helps us to figure out that these documents are correct and fetch the data from those agencies and validate the correct document which we are getting from the borrowers. Thirdly, and the foremost, which I think every one of us is facing right now, is the ever-evolving regulatory compliance. So I think with the RBI coming up with DLG guidelines, I think maintaining a balance or striking a balance between the innovation and the adherence to compliance requires a lot of vigilance, agility, etc. And I think in Arthmate, we have always tried to be a digital first approach, and that's why we have always been agile in implementing solutions that are available in the market. Let's say like Cashfree and other technologies which are coming into the market, like let's say UPI 2.0 or reverse penny drop and all those things. Just we can give a better experience to our customers, as well as we can maintain that compliance angle. If I'll talk about next point will be the user experience, which is the most important in the digital world. Because I think right now, as the shift is happening from a relation-driven approach to a gratification-driven approach, the user engagement has to be very seamless, very near real-time. All the operations-heavy tasks have to be, be reduced to, kind of a real-time task. Lot of minimal touch points has to be there. I think automating the complete process from onboarding to the disbursements and then to the collections, repayments and collections as well is quite required. So at Arthmate, if I'll talk about, we are majorly doing the co-lending model with a lot of NBFCs and REs. And there we are using certain kind of automated process, like we have a credit exchange model where we are running the credit policy of both internal Arthmate policy as well as the co-lender. And then we have a KYC engine, then we have real-time disbursements. Then we have, one-to-one mapping of the virtual accounts, etc., so that we can maintain a real-time disbursement and repayment cycle, I would say. And the lastly, which basically is the biggest problem for us right now as well, and we are working on multiple fronts to basically evacuate this problem, is the loan repayments and the recovery part. But I think when the physical connect is not there in this particular world, and the process is majorly driven by the LSPs, in a digital format, it is becoming difficult for the NBFCs to recover the loans. And this particular process has always been operations heavy, and we are trying to bring in technology to reduce the operations or reduce the workforce, and try to optimize the technology by deciding the right channel for collections, using different scorecards, data science models, early warning tools to identify the high priority accounts, so that we can focus our approach particularly on those accounts where there is a need of some kind of field agent required. Otherwise, we are using technology to handle all these solutions. Yeah.
Got it. No, that's great, Eklavya. And would Arthmate then technically be categorized as an LSP or a TSP in such a case, or is it a combination of both?
So you're talking about the collating model if you're talking about?
Yeah, so I'm just trying to understand. So basically, I'm assuming that you guys work in both the models, right? As a co-lender as well as sort of giving a technology stack.
Yeah, so we are giving the both. So majority of our portfolio is basically co-lendable. So I think we have a partnership with central bank and other NBFCs as well, where we are kind of doing a 80-20% kind of a model, as well as we are also providing tech support to a couple of our tech stacks, or let's say the P2P, which we have started recently with the name of Arthmate Direct. We are basically acting as a TSP as well as a co-lender to lend a particular loan. Yes.
Got it. No, great. Thanks, Eklavya. So basically, the co-lending model where, Arthmate is a tech-first NBFC and you partner with other NBFCs and banks. Moving to also a 100-0 model, and Raman, because Finsall works in an LSP model, just wanted to kind of get your opinion, especially because Finsall works in a very unique intersection of lending and insurtech, right? So you have stakeholders in two regulated industry. So wanted to get your point of view as an LSP, right? So how has the journey been with NBFCs? What kind of challenges do you face as an LSP, and how have you gone about solving for those challenges?
Yeah, sure. Thanks, Aditi. So, see, being the first mover in any business comes with its, own benefits and challenges. When we started Finsall with the vision to make insurance affordable, so we knew we have to deal with, to most of the, like highly regulated industry. On one side, there is RBI, and on the other side, it is IRDA. So while, coming to insurance compliance being in IRDA sandbox, so it actually helped us in terms of, dealing with those set of problems. And to be very honest, the recent guidelines on the DLG is icing on the cake for us, because so insurance industry, the source of the payment, right? It is the most important factor. So ideally, it is to directly go to the insurance company's account for purchasing of the insurance, the ethical means of collections, the sales, fraud detection. A lot of things are there. that actually, was, I would say, in the initial stages, we have to go through a lot of problems, just to give you an example, down payment structure, right? We don't finance entire 100% of the premium, right? There will be 15 to 50% of the down payment angle. So most of the NBFCs don't have that structure available. So definitely they can take the down payment, but identifying that money, while collecting from the customers. So there was no way out. So then, building that stack, working with the NBFCs and solving that problem. And then, directly discussing to the insurance company and giving them a proper reconciliation. So those things were challenging, but as on today, definitely, as we are growing, so a lot of things have been, taken care of. Now coming to the other problem, so 97% of the insurance sales that happens in India is through agent assisted model, right? So there, if you'll see, and so if I'll, ignore the millennials, right? Then most of the insurance sales is into tier 2, 3, 4, 5 cities, right? And there, if you'll see, these persons are not, very much okay to do a net banking transaction or give a mandate through eNash, right? So at that time, UPI 2.2 helped us a lot. So as of today, if you ask me, 70% of our mandate registration happens through UPI 2.0. And when this was covered under NI Act and Payments Act, so it kind of we were one of the very early adopters of UPI auto pay, but still I feel there is a gap wherein large NBFC partners need to implement this product for penetration into the tier 2, 3, 4 markets. So.
Got it, Raman. Thanks so much. In fact, I think that's a very interesting point that you made. How do you structure the payment, right? Especially in insurance where there's a down payment involved, right? So there's a lot more to it than just, underwriting the borrower, right? So I think that's where LSPs come in and they bring in different models, different ways of reaching out to a customer base, right? And that's really, really interesting. I think talking about payments, right? Wanted to now move to Tushar, because Ring and Kissht, as brands, one thing that Ring has solved for is not just easy access to credit, but also easy access to use of that credit, right? For example, for bill payments and so on and so forth. So Tushar, just wanted to understand, and we spoke, till now we've been talking about DLG and the impact. Even Raman mentioned that, right? That while in the short term it was quite a shocker, but in the long term it is actually going to streamline a lot. So for Kissht and Ring, keeping the DLG in mind, how have you, continued growing and giving that experience, especially because you also look after payments, you head payments, right? How have you gone about creating that experience from a disbursal and repayment standpoint?
Okay, thanks, Aditya. So we as an organization what's always been wanted to provide customer not only access to the credit, but use on the daily basis. So I wanted to solve the daily needs of the customers. So but now with the evolving needs of the customers, with the new generation, they just won't want the pre-approved loans, but they demand on-demand disbursements, right? And so that is the case. And with other services like bill payments, BNPL, they want easy access, the on-demand credit services to them. So with the digital guidelines, see, my view is with RBI wants one-to-one relationship with borrower and the RE, and not just the LSP. Wanted the LSP have to just lesser skin in the game. And with considering that they don't want to restrict the innovations, but also want there should be a responsible lending. So considering the BLG guidelines, it does allow the NBFCs to disburse the loans to the when the customer when we know the end use of the purchase or the end use of the credit. And there comes our solutions that we want to provide to customers, that is bill payments. So we are engaged in the with BVPS and provide all the BVPS services through credit. So how does this solve for the customers is whenever then we have some issues, so they have to pay the bill payments, they can just access our application and pay the bills on the credit. So the disbursement, though in this case doesn't happen directly to the other borrower's account, but instantly the disbursement happens to the merchant account and the bill gets settled. So the customers, taking the loan and doing using that for the bill payments is a lengthier process. What we want to do is easy access, one-stop solution to the customers that they can use, take a personal loans as well as use this credit options for their daily uses. As I spoke about, BPS bill payments are there. We also have offline BNPL options to the customers. So we have a network of around 5 lakh merchants where we have placed the QR code with partnership with the bank at those locations. Those merchants act as a sourcing points for us also. That's a very innovative way of sourcing the customers, where we don't are not able to reach very effectively via social media marketing or anything. Those tier 2, tier 3 city merchants act like a sourcing points for us. And those customers onboarding through those merchants can use the credit limit that we provide to the customers on those merchants as a BNPL options. And we also have online BNPL through Cashfree. We provide those services. So the basic idea is that when the customer is engaged with us for a longer tenure of loans, we don't want customer to keep coming on to the application, use the other credit facilities on top of it to use for the daily needs. And that's what we want to do, expand the universe, provide all the other options on the credit basis to the customers.
Got it, Tushar. No, that's super interesting. So basically, the point is embedding lending wherever there is, the customer is interacting, paying bills, right, paying to merchants. That's the piece, and also, the fact that the RBI DLG, I think the intent, like you rightly said, right, is to ensure that the control is back in the hands of the lender, while also, empowering the others in the ecosystem. Also, in a way, it also with FLDG, for example, coming in. It also shows that the role of LSP is also very clearly, present, right, in the ecosystem. And I think from a payment perspective, just wanted to bring in my opinion as well. I think the bigger reason why DLG also came is because, there is a, there has been challenges around layering of funds, etc., which RBI wanted to check. So I think the bottom line is that embedded lending is here to stay, right? And DLG was not meant to sort of take it away. We also have Rajat here, who's sort of a master of embedded lending. So we'll talk about that. But before that, we have a poll right here for folks to take. What are the major roadblocks in disbursal and recovery of funds? So because I know that we have already 75 attendees, would love to hear from you guys on what you think is the major roadblock. Once that is done, I think the poll is done. Now we to Rajat, from an embedded standpoint. Rajat, wanted to get your view. A lot of us have been following, FinBox and, the wonderful content that you guys also provide about how, lending as an ecosystem is evolving and what is the role, of API banking, of embedded that, that can really fuel the lending ecosystem. So just wanted to get your opinion, Rajat. FinBox has taken this API first approach, right, to building a lending infrastructure for banks and NBFCs. Tell us more about, how an API-driven embedded finance will play out in the lending ecosystem. Where are you going to place your bets, and how do you, see the future?
Yeah, that's a fairly deep and loaded question. Thank you so much, of course, for having me over. And I'll just as an intro, FinBox is basically a TSP business. So we are a technology service provider to the ecosystem. So we are in service to people who are trying to build new things, new ways of serving customers, etc. And in that endeavor, we sort of solve teething infrastructure issues on both sides. So for LSPs as well as for lenders. And overall, imagining that building a new financial product would be super easy in this sort of day and age is what is sort of the mental model a lot of newcomers to the fintech ecosystem have. But that's not really true. Actually, there's a lot of work that goes behind the scenes to really make a financial product go online, right? And I would sort of go as far as saying that only a few products have been mastered by the ecosystem today, as there are a lot of moving parts to any lending product specifically. So, as the esteemed panelists have been sort of talking about, there are a lot of steps to running this business overall. And APIs play an important part in almost all of these, all of the parts of the lending value chain, from enabling people to do KYC, to sort of submitting their data, to risk assessment, to ultimately if it's a marketplace type lending model, finding and lender matching, and then sort of the loan ultimately going to the lender's books, disbursal. Then, there is the entire collections flow that happens, which is essentially educating the customer, setting up NAT, trying to sort of get this going on a month-on-month basis, or, if it's a shorter product, maybe sometimes weekly, sometimes daily also in our EDI product space. So all of these things are facilitated by APIs, right? And FinBox sort of sits in a place where we integrate with all of the providers in each space. And we also sort of build a bunch of proprietary technology, which is hard for folks to sort of build. And only, when you see a lot of data of the ecosystem work with a lot of players, can you really build? So some of these things are, of course, fraud detection through bank statement analyzers, credit decisioning through, device-based data, credit decisioning through rule engines, etc. So we have different products for all of these categories called Bank Connect, Device Connect, and Sentinel. And then we have an entire credit infrastructure piece that modernizes banks. So we're working with top 2 of the private sector banks, about 10 NBFCs who we power for, who can then offer these APIs out to NSPs today. We power very large marquee platforms such as Tata New App, Tata Business Hub, India Mart, bunch of others are, the larger ones are in sort of motion. Housing.com is out there. So all of this has come about through a deep investment in all of the parts of the infrastructure. It's been a long journey, I will say. And we think that only, say, about 10 to 15% of problems in the ecosystem today are solved, right? And I think we are super optimistic on solving the boring stuff. Basically, that's what we are trying to do, so that it becomes easy for people to innovate and serve their customers better, right? So we are in the enabler space, and we take only positions that sort of overall improve the ecosystem, and we can serve multiple parties on both sides of that. So, be it anchors or LSPs or lenders, right? So we build these in. That's where, we fit in. The bets that we are placing on are basically modernization. People think that APIs have matured in the ecosystem, but that's not really the case. Today, there is a lot that needs to be done to enable, different modes of collections, of course, say through NASH, through UPI, autopay, etc. Sort of enabling a bunch of this stuff on reminders, education, etc. But then also really facilitating different kinds of product that LSPs want to do. So, for example, EDI is a product that got really a lot of press at some point, but a lot of people have tried it, but it's very hard for lenders to really work in all of the possible arrangements on EDI. VNPL again sort of seems easy, but for a lot of lenders, especially the banks, the fast process of reconciliation, disbursal, accounting for it, cancellations, response is very hard. So all of these things need to be sort of streamlined, and I think we are in it today, and the ecosystem is solving this, and we're maturing together. And I'm super optimistic that we'll be able to sort of serve our consumers better. Also micro SMEs, and there's a lot of interesting stuff on the horizon yet. So there's ODEC 1DC now sort of coming in, which gives us a fresh set of infrastructure to build upon. We are excited about all of these things. And the bets are on, continued modernization of the entire lending value chain. And we play our part in educating the ecosystem, providing tools to build great risk assessment models. So we've seen data of over 60 million borrowers over the last 5-6 years in a collaborative approach. I think that would be the largest data set in the B2B landscape, at least, right? So we built a bunch of models. We were a 40-member team just helping, with scorecards on alternative data, bank statement data, bureau data. We became a specified user as well with the bureau. So all of this stuff is something that moves the ecosystem forward, and we are always collaborating with people to solve hard problems. Yeah. I'll stop there. Happy to answer in more specifics if there are any questions. But yeah, this is where we are at overall in the ecosystem.
Great, Rajat. Thanks for the insight. I think, the bottom line is that a lot of the heavy lifting around the infrastructure, right, can be done by enablers such as you, so that, the lenders can focus on what their core skill is, right? And so can the LSP. So I think there is definitely a lot of scope overall, right, for lending infrastructure providers such as yours to really bring in, bring the pieces together, really make it an open ecosystem. And you mentioned ONDC, of course. What role will lending play in ONDC is going to be really exciting. So I think we are all looking forward to it. It's nascent, but it is growing at a really, really fast pace for sure, right? And you mentioned certain payment elements also. So I, bring Samir into the conversation. Samir, would love to get a Cashfree point of view here and a payments point of view, right? Because, with, again, DLG clarifying that payment aggregators can have a very legitimate role, right? Which was a little unclear in the initial DLG guidelines, but got clarified in the FAQ, etc., right? So just wanted to get your point of view of what kind of solutions from a payment repayment perspective, right, that lenders and LSPs can look at. And, how is that whole ecosystem shaping up?
Thanks, Aditi. So I will answer the question into multiple buckets, right? I kind of heard the other panelist members kind of talk about a few theme points so far, right? DLG obviously came into the topmost of that. How do we figure out other compliance that might come in future? How do you build the compliant businesses for your, either as the LSP or as an NBFC? We also talked about ensuring how credit going to the right set of stakeholders, right? I think Eklavya mentioned, and also I think Rajat also mentioned that fraud detection across the ecosystem is very, very relevant for us at this point of time. So from a Cashfree's perspective, right, at this point of time, what we have done is, again, just touching about a bit upon the compliance part first, we have created specific solutions for, NBFCs, for LSPs, and even DSPs to ensure that money flows directly to the end NBFC's bank account. While we work with a lot of, LSPs currently, we have created multiple, scenarios, multiple workflows to ensure that all the tenets of DLG guidelines are being met, right? We have something called a vendor model, with something called a split model, and a few other use cases which you look to solve for. Raman mentioned that they currently face a lot of challenges from a tier 2, tier 3 perspective on how collection can happen. So again, from a Cashfree's perspective, we provide multiple payment modes today. We provide e-NACH, which is a digitized version of NACH collection. We started working on the physical NACH side of things as well. And the larger piece which the ecosystem is kind of trending towards right now is the UPI auto-pay solutions, right? Now, what happens from a tier 2, tier 3 perspective is that we see a lot of folks are not really aware of how net banking, debit card and things like that. But the penetration of the UPI is extremely high and extremely easy for the Indian mindset to work, to understand also, even in our smaller towns, right? And that is where UPI auto-pay is kind of playing a huge role. And I will again talk more about it in the follow-up details questions. But if I talk from a Cashfree's perspective, right, we also work with, for each of these payment modes, we are working with multiple banks. Now, Rajat mentioned a point key, how do they ensure that there's a lot of, backup from an API perspective? How do they ensure the API that you give to the merchants are the best in stack, right? So what Cashfree also does is, we try to partner with multiple banks in each of these spaces, in each of these payment modes, to ensure that we are not down. For example, if a specific bank is down, a specific route is not working, we are able to redirect customers to a different mode of payment collection as well. So that is something else that we do. We have also come up with a few more tech-driven initiatives, like for example, the type of mandate setup that we do, we kind of allow it for specific frequency, and we also allow it for on-demand setup as well. It works for, if you're thinking from a standard home loan kind of setup where money has to be paid on a specific date of every month or a specific amount. We also look at microfinance kind of a setup as well, where money might, the amount of money might go up and down, and the payment can also happen on different days of the month as well, right? There's no set frequency there as well. From a user experience perspective, right, what we work very closely with the LSPs and NBFCs also how the end consumer, when they come to create a mandate, right, because that is the user experience part of things, we kind of allow our merchants to, look at use the Cashfree checkout, use a seamless mode of, APIs where they can create their own checkout. And also, we have recently also come up with a SDKs where, a merchant can plug our, user experience directly into their own app, right? Again, it typically works for digital lenders specifically, where they want to move everything within their own app, and that is where these features come into picture.
Got it, Samir. No, that's that's very insightful, and I think from a payment perspective, we are also constantly trying and evolving to be able to support the ecosystem, right? So we have to move just as fast as the new regulations that come our way to support lending as an ecosystem, right? So thanks for giving that overview.
And I just wanted to touch upon one more thing. I think a lot of panelists have kind of touched upon the fraud detection piece. Like, how do you ensure that the money that you're giving to the person is, how do you ensure that you will get payment back, right? And not just from the process, from a tech perspective, right? So for that, one thing that we've also done is we're also doing a background verification as well to ensure that the mandate is being created from the account from where the KYC has already happened. I think this is just one of the many ways which, the ecosystem, from an ecosystem perspective and being a tech-driven partner, we're able to provide to the ecosystem saying, the chances of fraud or non-payment kind of goes down if you're able to follow certain measures there.
Absolutely, Samir. And also, there's I'll take a few questions as we go as well. So there's one question, which maybe Samir you can take up, which is basically, by Zubin Khan. He wants to understand the end-to-end API for payment receipt reconciliation, and where manual intervention is not required, what is the quality or zero error benefit that we have? I think to summarize, they want to understand what is the API stack that is there in payments, and how does it, how is it beneficial versus a manual intervention? So maybe Samir would love to hear from you, and then if anyone else in the panel also has a take on it, we'd love to hear that.
So if you think from an API stack perspective, if I just make a comparison of manual stack versus API stack, right? For example, if you think from a key mandate perspective or UPI setup perspective, what happens is a lot of processes have been automated at this point of time. Compared to the older setup of paper, where a lot of mandate registration was on the side of that is one thing that is happening. Again, when we think from how the ecosystem is expanding, and like how Rajat also mentioned, right? API first approach. How do we do that? That is where a lot of setup around, a lot of merchants wants to use our APIs rather than use our checkout experience, so that they can plug and play into their setups as well. So those are some of the pieces that we are able to do today, and this is how the ecosystem is also moving in future.
Got it. Thanks, Samir. Also, there's one more question which I'll request Rajat and maybe Eklavya to also chime in. This is about supply chain finance, right? So I think this is an LSP who has a supply chain finance platform, and they partner with multiple NBFCs to handle the cash flow in the lending process. And reconciliation becomes tough here because NBFCs are not allowing to integrate into their systems, for which they are having to handle disbursement and reconciliation manually. And they just want to know if there are any pointers that can help enhance the process. I think after DLG also, there has been a little stricter access to information also from NBFC's end, right? So Rajat, maybe starting with you, would love to get your view on what could be, some of the ways in which they can handle this issue of manually having to do the entire process.
Right. No, yeah, this is definitely not a solved problem, and I don't have a silver bullet answer to this problem. So I'll maybe there are I would say actually the reconciliation settlement problem is actually multifaceted problem. It is an information gathering exercise. It is a tabulation exercise. Also, there is a bunch of sort of back and forth in terms of cash flows, because you might have to settle refunds, or you might have to settle, basically, you could say non-standard transactions as part of the standard movement of funds. Then you might have to recognize revenue on some of this. There might be various shares given to LSPs, to TSPs, etc. In the middle, there's also the payment aggregator piece here. All of this makes this very, very complex, right? And I feel overall how this is today being solved by, say, lenders or NBFCs is that they recognize that, at an accounting level, it is their job to figure out the cash flow and sort of account for all of this. But the entire data movement and the technology piece, at least for the larger ones that we work with, is sort of given to the TSP. So something that we sort of take care of for these sort of, NBFCs today. And, we sort of built an internal system. Nowhere is it perfect, because all of these guidelines are moved in. A bunch of workflows, that we built in. And the system is still evolving, I would say. And matching up the transactions, etc., sort of happen, more or less automated, but they still need to be QC'd and checked by, our FinOps team to sort of settle. And ultimately, also needs to be sort of checked by the NBFCs themselves, because ultimately as TSPs, we are not providing a service, but ultimately not actually, doing the transactions, or don't hold the sort of, don't sort of carry the operational burden as per se on this. So, this is how we are solving it. And our feel is that as the system stabilizes and all of these standards sort of emerge overall, or the industry best practices emerge for each of the credit products that we are in, our sort of product will stabilize internally. And it will also we work with the payment aggregators folks as well to pull in a lot of this data. And sort of, I think those systems, as we see it, also are evolving, right, to sort of support all of the reconciliation, all of the metadata that is needed to sort of track a transaction through the system, are still evolving, I would say, on all fronts. So I would say not a solved problem. I think it is a fairly interesting sort of problem to solve. And there have been few companies in the West, also some in India as well, who sort of just built their entire company around reconciliation. So I think it is a big enough problem that entire companies are started around this. And we are hopeful that at least we can play the part that is required to smoothen all of these transactions. But if there are players who are dedicatedly solving this across credit products, etc., we're happy to work with them as well. So yeah, that's two sides from my side. I'm sorry I don't have an answer to the problem today, but we're working on it is all I can say.
No, thanks so much, Rajat. I think, very well put, that there's no silver bullet here. And I think a lot of things will evolve. From a payment perspective, for example, also, there are models that we are looking at building, for example, partner models, right, where the LSP may not be the one who is doing the money movement, but can have some level of, visibility, right, to solve some of these problems. So it's an evolving solution, I think, where all the players are kind of trying to figure out what is the right way in a compliant fashion, of course.
Yeah, absolutely. And it is different for different guys. So if you're working with banks, it is a very different way that system functions versus sort of a large NBFC or a smaller fintech focused NBFC who can do API calls, etc. On one side, you're talking CSVs in SFTP folders. On the other side, you're talking API calls. There's a bunch here that is insane on the interfaces as well, right? So that is, and in sort of these faster moving BNPL type products. So for example, if somebody's taken a 7-day working capital loan, but you're sort of taking 2 days to settle the amount, it sort of becomes meaningless ultimately, right, for them. So it's also cutting to the very core of the offering that you are actually providing to the end borrower, which makes this process very, very important, right?
Correct. It's like, you're taking a loan for repaying your credit card payment, and then the loan itself doesn't reach on time, then it just, defeats the purpose, right? I've seen one post that went viral about a use case like this just a few days back. Eklavya, any inputs from you? Because I know that, Arthmate also does supply chain financing, I'm assuming in partnership with other NBFCs. So anything you want to bring in, from your point of view?
Yeah, sure. So I think what Rajat was saying, we were facing the same problem in the past because we have multiple product partner combination. And so we are doing EMIs, we are doing EWI, EFI, EDI as well. And we have supply chain products as well. And the major challenge that comes is of the reconciliation. It's an operations heavy job, teams working on spreadsheets, spending nights, and all those things. So I think there are a couple of things what we have started doing, and I think it's helping us in a couple of parts. So first, we are making the use of the data science altogether. So we have a complete data science team exactly working on this particular problem, where what we are trying to do is we are trying to basically introduce a global variable in the system of the complete journey, let's say from the onboarding part to the collection part. And from there, we are basically trying to figure out that against this particular global variable, what all collections or what all money is coming from the borrower. And then we are trying to target, and we have a reconciliation engine, which is basically running in the night and trying to recon that particular loan. We have also started on creating a virtual account for each loan basis, where whatever payments we are basically receiving from, let's say, BBPS or maybe the dynamic QR, UPI and all those things. So directly they go to in that particular account, so that we know that this has come from this particular borrower, and we can directly use the technology to basically map it with the particular loan. So I think this is one of the things what we are trying to do, because in our case, we are trying to give our customers, real-time data about their SOA, about what is happening, what all charges we have basically incorporated and all those things. These are the two things we are majorly doing right now. Moreover, we are also working on with the services like Cashfree and all, where we have like multiple merchant accounts available, where the LSPs are facilitating the payments for us. We are taking data from those LSPs as well through API, and we are mapping that particular data against that particular loan to basically help out or figure out this recon issue.
Thanks. Yeah, Raman.
Yeah, so I have one more point to add here. So one is, so as Eklavya mentioned, like account level virtual account creation, right? So another solution which, I have seen is like many large lenders, right? They still don't have a merchant level virtual dedicated, virtual account, right? So, so suppose being a LSP, a lot of payments are going to their collection account, right? So that I am redirecting either through payment gateways or through, NEFTs or some other means. So during that time, when, I want to kind of do a recon, so I can't get the access to their statement because a lot of other merchant transaction also will happen. So, creating a merchant-wise virtual account will also, solve the recon problem to a larger extent. So that is what I pay.
Absolutely. Raman. So I think virtual accounts, whether it is via a payment aggregator or directly with the bank, is definitely one way, especially in the B2B SCF kind of space, right? Of course, in B2C, there are other modes of reconciliation as well, but overall, I think virtual account is a great, great answer. I hope that whoever was the person who asked the question, this was, helpful from all the panel members to, get an overview. Raman, just carrying on, since we're talking about different tech solutions, right, that are used by NBFCs and LSPs for the segment that you are in, right, for insurance, BNPL, what kind of tech partners do you work with? Would love to understand a little bit more, especially because wherever you build different, like you mentioned, different kinds of payment flows, right, different structures required, what kind of tech partners typically help you out in this journey?
Sure. So, So see, like being a LSP, we have to be dependent on, many of the DSPs, right? So starting from taking care of the eKYC journey or, the agreement signing. So we have, vendors who are facilitating. So, in terms of KYC identification. So again, if you'll see, it is more of lender dependent nowadays because probably lender A, is integrated with one of the eKYC, TSP provider. So at that time, we have to integrate with them because, the kind of, responses that they give. So there might be a variance. So for example, one lender might be, capable to read the DigiLocker response, but other, lender might have the, capability to read both DigiLocker and UIDA response for other eKYC. Again, coming back to bureau, right? So today the main challenge is, right, while integrating with multiple lenders, probably one lender will be working with Sybil only, and probably the other lender will be using CRIP for experience. So so there actually, for me being a LSP, so I have to take care of insurance company integration. So today, for example, I have to, I've already integrated with 12 and another, 40 are in pipeline, right? Because total 57 insurance companies are there. So that is my primary focus on the growth side. And on the secondary side, if, any TSP who can come in and kind of, give me a multi-bureau approach. So that will, kind of solve the problem. So that is where recent guidelines has actually addressed wherein, the specified user onboarding has been, permitted, and we can, basically take the customer consent data and all. So coming to the payment side, right, as I was mentioning, so on the ENS side, definitely there was a blocker in terms of catering to the tier 2, 3, 4 customers. Having said that, UPI has evolved, in the past 2.5 years, but there is a lot to do because I feel for just to give you an example, so basically this NI Act coverage and payment check coverage guideline as it came in 2022, but the ecosystem is still not ready to adopt it. So there are certain players who has actually done end-to-end integration because like from the bank level to the PSP level, payment aggregator, everybody is integrated, but there are still gaps like. There are certain banks who are still not, providing that flag of, non-removable mandate. So that is a bigger challenge because there, though we'll do penny drop and, check the active status of the bank account, but after, registering the mandate, people can, revoke their mandate from, the easily accessible PSP apps. So I think those gaps need to be filled. Yeah, there is as Rajat was mentioning, there is a lot to do, in terms of solving the problem of LSP and fintechs. Another problem is like down payment. So I was mentioning, so not down payment on the cancellation structure. So the recent guideline is covering the 100% financing aspect or unsecured financing aspects. What about, if people are building products on the secured products, right? So there might be a securitization aspect wherein, the cancellation of that product or, invocation of the security works. What about, dealing with the recovery proceeds? Who is going to take care of that thing, right? Today, there is a cash collection, which can be done through the third-party collection agency, which RBI is permitting, right? But all the digital means of payment shall be routed directly to the NBFCs. So, but if, there is a process of, lengthier process of cancellation or security invocation. So at that time, there is still a gap which needs to be solved. So, so these are, the certain aspects. And yeah, definitely on the AML fraud side, so a lot of companies are coming with their own internal AIs and they are detecting, fraudulent activities like going through their, apps and like obviously on the selfie also today, we are getting a lot of fraud detection elements like through liveliness checking and all. So yeah, there are different pros that we are using, and yeah, so I'll be proud to say I have been working with Cashfree in for multiple lenders, and on specifically on the recurring payment or e-mandate setup. So the success rate in terms of this UPI auto pay and all is has increased a lot as compared to 2020 or 2021. So that is one feedback I have. So yeah.
Raman, thanks. Thanks so much. That's super insightful. It also helps, I think, folks who are in the industry understand that for every use case, the set of products that you need is very different, and hence the, TSPs that you choose also have to be accordingly, right? So that's super interesting. Tushar, wanted to get your opinion also from a Ring and Kissht standpoint. And what factors do you guys look to evaluate? You've given that you work with multiple lenders in the back end, right? How do you what factors do you use to evaluate the right kind of technology, the right kind of partners from a TSP standpoint? Would love to hear.
Okay, thanks, Kaditi. So I will touch upon the three factors here. For the instant disbursals, right, the onboarding needs to be as instant as possible. So considering we spoke about the fraud detection, right? So while onboarding the customer, when customer and enters the bank account details, the general method of doing the bank verification is through penny drop, right? But I find that there is another way, as Eklavya mentioned, that is the reverse penny drop, and I feel that that is a good mitigant for the fraud detection. Because when we do a forward penny drop, there is say suppose Mukesh Kumar and Rakesh Kumar that are bound to the system itself is bound to match their percentage to 80-90%, and the system will consider that as the same person. And that this happens in India a lot because there are a lot of common surnames there, right? So with reverse penny drop, I guess how it can be mitigated the fraud is with the reverse penny drop, the customer has to pay rupees 1 to us through a UPI that is installed in his application, right? So when he does that, the UPI application he is using is already a verified application, right? And it's installed in its own application. So Google Pay or Phone Pay or any other has already done the device binding, SIM binding of that customer. And through when we know that the customer is an authenticate customer, and when we get the details of the customer back, we are for sure that okay, the customer name matches perfectly with the customer that we have. That is a good way to do a back verification, and that is, I guess, better than forward penny drop that will enhance the instant disbursal services that we offer to the customers. The other one is, I guess, the new technology that has been there is account aggregator. I guess through digitizing the onboarding journey of the customer, we need to it's completely digitized. Earlier, the requirement was to upload the documents and to review the documents. Through account aggregator, the bank statement can be seamlessly passed to the lender. It can be easily verified through the bank statement analyzer, just like FinBox provides. And it's easier way to analyze the customers, the credit, and we can also underwrite the customers within an NTC with this kind of method. And this has been very useful tool for just completely digitizing the process where there were a lot of documentation required earlier. And the third thing is the new product that we launched along with NPC. We're the first one to launch it is on the repayment side. I guess that would change the how the repayments are. And as we speak, the quick disbursals are important. That is the instant demand of the credit. It's very useful for the lenders to have the easy repayments too, easy and quick repayments. So currently the ecosystem is with the payment gateways, the bank APIs and everything that is integrated. That customer has to bypass the to go out of the application and do the payment, and their success rate in that case is compromised, right? So NPC has launched a very useful option for that is the UPI plugin, and with UPI plugin, I guess. You can type with the bank which provides the UPI SDK of your own, and you can embed that SDK on your platform. And with that platform, you can your customers can create their own UPI handle on your application and can use the same UPI handle linked to the bank account for the repayment also. So the customer's journey, once the customer is onboarded and the customer has created UPI handle with you, and it's your customer now, and he can seamlessly just enter the UPI pin and just the repayment is done. So these are the kind of services that not only the instant disbursement, but instant repayments too. That's the need of the and when the customer is eager to pay, then just get the payment. Just don't let the customer go away and have the second thoughts on it. So that's the thing. I guess 3 innovative solutions are there. Talking about with co-lending setup, it's different. You are working with different finances. With the DAG guidelines coming into picture, where the repayment needs to be coming to the lender's account only, the RE's account only. So with the different payment modes, routing it to the lenders, the specific co-lending account, that is escrow account, and then doing the reconciliation. Yes, that's the still there are lot of payment modes that needs to be done. A lot of routing in the backend and everything. But whatever routing and everything happens in the backend, so I feel that on the repayment side, the customer journey should be as seamless as possible. Customer don't want to look at what co-lending or whatever you're doing in the backend, but I just want to do my repayment, and that's the journey, the simplistic possible. That journey we should keep as simple as possible.
Got it. Thanks, Tushar, and great point that if a customer wants to do his repayment, make sure that it's as seamless as it is possible, right? So not just instant disbursals, but seamless repayment is also super important for digital lending, right? So thanks for that input. We only have 5 more minutes left. So what we'll do is we'll try to take some of the questions that have come in. There's one question, Samir, which is for you, specifically on UPI autopay. So do you support non-revocable UPI autopay mandate? And maybe we can just touch upon sort of UPI autopay, because there's generally a lot of interest on that mode of repayment.
Definitely, Aditi. So just to one word answer, just we support the non-revocable flag for the lending use case, which is MCC 72 at this point of time. To touch upon what Tushar and a few other folks also mentioned, that in the ecosystem at this point of time, there's a bit of a confusion on not all the banks are supported, but with the current partner banks, they're able to support the non-revocable flag across the ecosystem. From a UPI autopay perspective, what we have also seen is in the last few months, right? There's a lot of improvement that have happened from a UPI stack perspective, specifically for lending category, right? There was this increase of payment from 5,000 to 15,000 happened sometime last year. That has kind of opened the business to more larger lending use cases. And the way when we interact with NPCI, we also understand there are discussions of increasing this further over the course of next few quarters as well, right? UPI autopay as a payment, we have grown 3x. If you look at net new mandate registrations, in June last month, they crossed 1 crore new mandates in a single month, which is huge, which is like a 3x growth from a similar period last year, right? What also happens is from an SR perspective, like folks in the panel also touched upon, how do you improve a good customer experience, the SR side of things. From a UPI autopay perspective, we have intent flow, which enables us to ensure that the mandate creation has a higher success rate compared to a standard, say, a collect flow or even a QR flow as well, right? So these are some of the things, that opportunities that we see in the ecosystem, that makes me feel that UPI autopay is a very, very good mode of collecting repayments in a very seamless fashion across the ecosystem.
Hey, thanks so much, Samir. I think I hope this clarifies UPI autopay is a solution that lenders can use, especially for smaller ticket size loans, right? There's one more question, and I'll request whoever might be the right person here to give their opinion, which is basically about RBI asking regulated entities to figure out mechanisms to ensure that repayment proceeds are not coming from money laundering activities. So what are the solutions available with respect to cashless collections? So maybe Eklavya, do you want to give a shot? I mean, of course, is the fact that money has to go from borrower to lender directly, right? That itself is a requirement in RBI guideline. But any thoughts from lending perspective? How are you guys ensuring that money laundering activities reduce?
So I think as we've already discussed, and other panel members have also talked about, basically DSG putting control in the hands of the RE right now on the money flow altogether. So basically, and plus there is an end use monitoring of the disbursal as well. So let's say whatever accounts we are using during the time of KYC or the onboarding or the, I would say, the credit underwriting part, the same account will be used for the collection of e-Nash or maybe through UPI or through whatever way the money is coming from. So we try to make sure that we are disbursing it the same account that we have used for the underwriting. That is one part. Secondly, we try to register the NACH on the same account, exactly the same account which has been used for, I'm talking about basically where there is a borrower-to-borrower relation and there is no other beneficiary altogether. But in terms of borrower-to-borrower relation, I think, so we are registering NACH on the same account which was used for underwriting purpose as well as for the dispersal purpose. This is how we are managing, and we are basically trying to keep a tab on it. The money is coming from this. Now, like services like Cashfree and other services that are available in the market, they're helping us to basically validate the account the money is coming from or the money is going to. So that is one more point we are basically trying to cater to basically manage that this particular money which we are getting is not coming from the third party. We don't accept any payments that are coming from the third party and has to come from the borrower's account. So whether the loan has been given in a D2C or B2C kind of a model or a B2B2C kind of a model, in both the cases, it is mandatory for the LSPs as well to basically the payment should come from directly from the borrower's account. So there are certain mechanisms we have also started. I think as currently Tushar was talking about, we have a dynamic QR link. We have a way to generate the QR, the UPI handle altogether via the API which we have right now, and that API can be used directly to collect the funds through UPI. Likewise, we have started using UPI 2.0 as well for the borrowers which are there in the tier 3 and tier 4 kind of cities. So that the NASH, if the NASH is not happening, then we can use these services to help us, and this can be a game changer, I think, in the future.
Great, absolutely. Thanks so much, Eklavya. And just to add on from a payment perspective, like you mentioned, right? So there are remitter locks available in multiple modes of payment, whether it be UPI or net banking, right? So essentially it ensures that money moves from the borrower, right? And that eliminates sort of the challenges of AML. And also on a dispersal side, earlier wallet-based dispersals used to be one popular mode of dispersal, right? Where payment aggregators used to provide wallets on nodal accounts. And after DLG, now again, that is something, that has gone away. So money will always move from the lender to the borrower, right? Through connected banking or through direct dispersal. So these are some of the ways. Of course, things will evolve and more risk-related engines will also come into play to mitigate. But thanks for summarizing, the key ways where, how you as a lender are solving for this problem. I think we've run out of time now, but thank you so much. I think for me, the 1 hour just flew and I didn't realize, with such an insightful conversation from all of you. And thank you so much. I know that there are a few other questions that people might have in mind. If the attendees, if you guys have any more questions, feel free to email us. We will try and get those answers from our panel members as well. But thank you very much. Thanks everybody for joining in. And I hope that this was a relevant session and people were able to take home a lot with respect to their own lending journey. Thank you. Thanks everybody.